Every day, millions of Pakistanis, from street vendors selling samosas to small shopkeepers in Peshawar, rely on cash. With approximately Rs 9.4 trillion in cash circulation as of January 2025, Pakistan maintains one of the world's highest cash dependency rates. This dependence on physical currency comes at a steep cost: lost sales, security risks, and exclusion from the formal financial system. What if a simple QR code could transform this landscape? Let's talk about setting the stage, the magnitude of informality. Pakistan's recent economic survey reveals a sobering reality. The country's economy reached 411 billion in fiscal year 25, yet operates on two parallel tracks. Experts at Prime believe that shadow economy accounts up to one-third of formal economy at $132 billion. 64% larger than the formal economy of $340 billion. This shadow economy employs 72.5% of the non-agricultural workforce and contributes over 35 to 40% of GDP. In retail alone, 40% of Pakistan's retail sector operates informally, costing the government over Rs 1.5 trillion annually in lost revenues. From Karachi's sprawling markets to Lahore's historic bazaars, 85% of business transactions remain cash-based, leaving millions economically invisible. Let's talk about India's digital revolution, why that is a compelling comparison. Across the border, India faced identical challenges until 2016. The National Payments Corporation of India launched UPI, the Unified Payment Interface, transforming the subcontinent's payment landscape. The numbers tell an extraordinary story. UPI's open architecture invited hundreds of FinTech innovations, creating an ecosystem where even roadside vendors accept digital payments. The result? Small merchants who once operated purely in cash now enjoy faster turnover, transparent bookkeeping, and enhanced security. On this side of the border, Pakistan launched Raast, a promise and present reality. Let's discuss that. Pakistan State Bank responded with Raast, launched in February 2022 as the country's first instant payment system. The platform has shown remarkable growth, processing over 892 million transactions worth 20 trillion since inception. However, adoption among informal businesses remains limited. Despite processing over 88% of retail digital transactions by volume, Pakistan still faces significant barriers to mainstream adoption. So let's discuss, why does the digital divide exist? What are the infrastructural and access challenges? Pakistan's digital infrastructure reveals stark disparities. Internet penetration stands at 54% of the population, translating to approximately 118 million users. However, smartphone adoption reached only 57% of cellular subscribers, leaving 46% still without mobile broadband access. The Digital Nation Pakistan Bill, approved by both houses of parliament, aims to bridge these gaps through integrated digital infrastructure and governance systems. The recent budget of fiscal year 2025 to 26 signals a decisive shift towards digital formalization. Government introduced a digital transaction proceeds levy targeting e-commerce and digital payments. The budget targets Rs 14.13 trillion in FPR revenue, almost an 18% increase, with digital economy formalization as a key strategy. However, critics worry that aggressive taxation may deter small merchants from adopting digital payments. Instead, a broad-based tax net system is required. Now let's talk about the barriers. Why adoption remains low? Deputy Governor Dr. Inayat Hussain revealed Pakistan's stark reality to the Senate Finance Committee. He quoted, "Pakistan ranks amongst the world's lowest in QR code adoption. The primary culprit? Tax-related harassments. Every digital transaction feels like inviting tax trouble." The UN-based Better Than Cash Alliance estimates the national digital payments adoption could boost Pakistan's GDP by 7%, generate 4 million jobs, and unlock a 650 million market opportunity for women entrepreneurs. Pakistan's economic survey reports 2.7% GDP growth, but digital transformations could accelerate this to the government's medium-term target of 5.7%. The State Bank's regulatory sandbox guidelines 2025 offer a framework for innovation. The National Financial Inclusion Strategy targets 75% financial inclusion and reducing the gender gap to 25% by 2028. Pakistan's smartphone penetration target of 74% could unlock massive adoption if combined with supportive policies. Visa's value of acceptance study reveals that 78% of Pakistani small and medium enterprises view digital payments as essential for growth. Among businesses accepting digital payments, 75% report increased revenue and 87% see higher customer footfall. While Pakistan processes rupees 547 trillion in digital transactions annually, this represents only 12% growth compared to India's 42% annual growth. China's WeChat Pay and Alipay demonstrate how government support can accelerate adoption. For a regional comparison, India's UPI processes $18.68 billion of monthly transactions. For China, that number is averaging around $4 trillion in 2023. Pakistan, however, lags significantly behind these two countries. Pakistan stands at a digital crossroad, with 5.24 million small and medium-scale enterprises driving the economy and $457 billion in informal economic activity. The digitization opportunity is unprecedented. The recent survey shows encouraging signs: inflation down, current account surplus achieved, and private investments growing. Digital payments growing 35% annually represents the fastest expanding economic segment. From Karachi's bustling markets to Lahore's historic bazaars, QR-powered convenience can unlock Pakistan's true economic potential. The question isn't whether digital transformations will happen, it's whether Pakistan will lead or lag in the region's digital revolution.